I'm going to actually start with last week, if I may, because when you were on Wall Street Week, you said something at the Fed that a lot of people reacted to. They asked questions why that is. You said in their bond buying program, they are perversely, I think was the word you used, actually shifting us toward shorter-term funding structure when we should be going to longer-term funding structure. Could you connect those two things up for us?
Sure can. First idea, the Fed is a creature of the Treasury. The Treasury owns the Fed like the subsidiary of a company in a financial sense. What does the Fed do when it does quantitative easing? It puts out money, which carries a short-term floating interest rate as bank reserves, and it buys up long-term bonds. And so, in effect, the government now has a floating rate short-term liability outstanding rather than a long-term fixed interest rate liability, since the Fed is owned by the Treasury. At a moment of super uncertainty, at a moment when many people think rates are remarkably low, a decision to fund more short seems bizarre. And that's just one of the reasons why I think as quickly as we prudently can without destabilizing things, we should be bringing QE to an end.
At the same time, this week we found out that the government, at least part of the government, would like to borrow more money as we had that $3.5 trillion budget resolution past the Senate, now headed over to the House. As Congress looks at this, because there's a lot of steps to take before it actually gets made into law, what should they be thinking about? What should Congress be concerned about in terms of macroeconomic policy?
Look, the broad message of Bidenomics, of Build Back Better, that investment deficits are just as serious or more serious than financial deficits, and we have to address them, is right. But as we do it, we need to, one, pay for all the investments that we make with genuine revenue increases. Two, be very careful about locking in future liabilities that we don't pay for by, for example, funding very popular tax credits for just a few years. And three, making sure that what we call investments really are investments that augment the supply capacity of the economy. If we do those three things, this can be a contributor to non-inflationary growth and rising standards of living for years to come. But if we don't, there's a real risk that it's going to fuel an inflationary psychology and actually bring forward the date of the next bout of financial instability or recession.
So you have talked to me about inflation a fair amount. The Biden administration reportedly took some steps maybe to keep down at least the price of gas at the pump this week. Ironically, when they're trying to cut back on greenhouse gas emissions, they asked OPEC Plus to increase its production. What did you make of that as a matter of policy?
Look, I don't really hear the melody quite right on some of this. With Buy American, with raising tariffs, with various regulatory policies, with so-called worker-based trade policies, the goal of the Biden administration sometimes seems like it's to raise the price to consumers of most things, to help workers and to help businesses, and then to reduce the price of gasoline. Since we've seen this week that energy consumption is the most toxic form of consumption that households engage in, I think it's highly problematic to be trying to bring its price down while trying to bring every other price up. I think there's no more important price to increase in the American economy than the price of carbon-based fuels. And so this is a perverse kind of step from my point of view. I'd much rather see us do it in other ways than by helping OPEC. But in general, the right direction for gas prices is up, and the right direction for most other prices is down at a time of inflation, and policy seems to me in important respects to be pushing in the opposite direction.
Another important initiative of the Biden administration is the moratorium on evictions. And as we know, that lapsed from the Congress. They got the CDC to actually extend it now into early October. At the same time, it pushed the envelope a bit, I must say, on the law. Being a lawyer, reading the Supreme Court cases, it struck me it pushed the envelope.
I'm not a lawyer, so I can't judge that. It's clear from the press reports that essentially all the lawyers in the Biden administration had concluded that there was no real legal grounds here, and then they were able to find some rationale. It's frankly the kind of thing that Republican administrations have sometimes done with national security arguments, but this, on the press reports, looks like it's reaching a long distance. I understand about responding to emergencies, and there are certainly tragedies involved with evictions. But if you look at the overall picture, the picture is that household liquidity, household cash balances are at record high levels. Household debt service, and even lower and middle income household debt service, is at low levels. Other indicators of financial distress, like credit card delinquencies or car repossessions, are at relatively low levels. So I wonder this late in the process, in the midst of so rapid an economic recovery, whether an absolute eviction moratorium is necessary. And I wonder whether, if it is necessary, it shouldn't be legislated by Congress rather than called some kind of public health necessity from the CDC. I think the CDC would be better off focusing on getting us vaccinated, frankly, than on intervening in landlord-tenant issues.
Yeah, by the way, Larry, as I read this report, that's what basically they said. Come back when you've got some legislation here. Don't do this as a matter of executive order. But you mentioned vaccines. Let's go there, because you're part of a very important group, the Aspen Economic Strategy Group. They came out with a statement this week really calling on the U.S. to take a leadership position on vaccination. Tell us about that.
David, we're spending, or proposing to spend, $3.5 trillion on investing in the country's future. I cannot understand why we would not spend 1% of that, at least, on protecting the country's future with a forward defense investment in vaccinating the world. It protects against evolution that could be very damaging to us as we get variants beyond the Delta virus. It would be a huge source of American prestige and influence. Let's face it, our vaccines work much better than the Chinese vaccines. We're constantly talking about shoring up our alliances in concrete ways. There's no way more concrete for more countries than this. And it showcases what has been a huge success of American private sector, public sector collaboration.
So, Larry, I'm really curious, because you've really led at very high levels in the U.S. government, including as Treasury Secretary. You have seen the intersection between politics on the one side and policy on the other. And there's a theme through what you've said today, I think. For example, in the pressure for lower gasoline prices at the pump. That's a political matter, I suspect, fundamentally. At the same time, leading around the world on vaccines, that doesn't resonate necessarily so well at home. How do you try to broker that deal between politics on the one hand, you can't ignore in Washington, and good policy that may not play that well politically?
You need to lead the people rather than follow the people. And that's what we did with the Marshall Plan. And we're going to need some of that, I believe, with respect to what I think are the most important global security challenges, climate change and pandemic disease. And my reading of American history is that the American people respond to leadership when it comes.